Good afternoon. I'm Ross from Smith Property Accountants, and we're going to talk all about interest rates. So, first thing I look at when someone talks about interest rates is let's do the maths on interest rates. So, let's not try and get too much into the nitty gritty. Oh, they're going to drop, they're going to do different things. Let's just work through the simple maths. So, when we're looking at interest rates, this is what Reserve Bank is predicting. They're obviously looking at flat for a little while, then down. So if we do some examples, so at the moment, standard 1 year rate 7.19%. In a year's time, they're expecting the OCR to be similar. So we'd expect perhaps a similar 1 year rate, maybe 7.19. OCR to then go down in the third year, so maybe 6.19 interest rate. If we average those 3 years, that is 6.86%. Obviously, at the moment, you go for a standard rate, 3 year rate, 6.49 is your standard fixed for 3 years. So, what I'd be looking at if you thought that was going to happen with interest rates, if you thought it was going to go 7.19 now, years' time, 7.19, you fix that for a year, then go 6.19, all 1 year rates. Why would you do those at 6.86 when you can have the security of a 3 year and at a lower rate? If you thought maybe they're going to drop a little bit, so maybe next year they're going to be 6.5 and then they're going to be 6%, that would average 6.56. So 3 years still looking better. Maybe you think they're going to crash a bit more, and yeah, you fix for 1 year, fix for 1 year. The third lot of 1 years you think will come down to 5.5%. That would be a 6.4% average for those 3 years. I would still be in that case going for the 3 years because it's fixed, it's secured. You know what it is. If interest rates jump up or go down a bit in this time, you're still looking at that. And yeah, obviously, if that's your expectation, it's only such a small amount below that it's not really a difference. So yeah, it's worth just looking at what do you expect to happen over the next 3 years, work out your average over those 3 years of your prediction. And no one has a crystal ball, no one gets it perfect. We can obviously go off Reserve Bank a little bit, but they don't get it right either. But yeah, your prediction of the next 3 years, 1 year rate. So 1 year, 1 year, 1 year. Work out the average of those 3 years, compare it to a 3 year. You can then do it with a 2 year as well. What happens if you fixed for 2 years and then, yeah, came off at a lower rate and fixed that third year for 1 year rate? So if we went 6.79, 6.79, use the same 1 year rate, 6.19, that's an average of 6.59%. So again, that's better than our average of going 1 year, 1 year, and 1 year. If you expected this rate to go below, you might find that beats the 3 year. Obviously, that's a bit more of a gamble, and you're being a bit more aggressive, hoping that the interest rate is going to drop down. But yeah, worth sort of working out your maths like that, working out what the difference will average over 1 year, 2 year, 3 year, which is going to be the best rate. And obvious tip for interest rate, don't have a huge amount floating unless you're going to pay it off quickly, because you'll be paying a lot higher. You'll be paying a percentage or more higher for floating. So yeah, why would you float? Yeah, if it's 6 months and you know that you're going to get an inheritance, maybe you fix it for 6 months and just check that rate is lower than your floating. Or if you know you've got big money coming in a year or two, you might fix for a year or two to max that up. But yeah, so generally, first tip, go through the maths. Second tip is yeah, fixed, don't float. And the third tip at the moment is ask for some cash back. Chatting to Carl from our mortgage team, and yeah, he's saying that yeah, often at the moment, if you ask for cash, if you don't ask for cash back, you won't get anything. So don't just click that button up on the screen and automatically get a cashback. Much better to talk to your mortgage broker, have a chat to them, and yeah, potentially you could get some sort of cashback, which is obviously great, getting some money back in your pocket rather than the bank. And yeah, there's lots of different options. Different banks lend on different things. Some will give you more money overall. Some will love new builds. Some will love businesses. They all have different sort of pluses and minuses to them. So yeah, chatting to a broker and sort of working out what you're after, what's best for you. It's not always just the interest rate. But yeah, hopefully you've enjoyed that video. Hopefully you've got something great from it. And if you do want to chat to someone, I'll chuck Carl's link in at the bottom in the comments for this. And you can just organize a free chat to him for 5 or 10 minutes. And yeah, hopefully learn something, or maybe get some cash back from your bank, or get a lower interest rate by negotiating. Cool. Thanks a lot.